I just went through Microvast earnings report for fiscal year 2022. In this video, I'm going to highlight the good, the bad, and in the end, I'm going to show you some things that I'm going to keep an eye on to see if the stock is a buy. Before we start, I have also made an in-depth review for Microvast and I'll place that link in the description. Please remember this is not financial advice and this is only for educational purposes. I'm gonna start with the revenue. In 2021, Microvast had a 41% year-over-year revenue growth rate as compared to 127% that it estimated in its investors deck. When Microvast became public via a SPAC merger, it estimated a revenue growth for 2021 of 127%, but unfortunately, it did not deliver. Moreover, regarding the revenue guidance for 2022, the company guided a revenue growth rate between 30 and 45% as compared to 95% what it estimated when it became public. This is obviously a letdown from the company, and although it had some headwinds in the industry with the prices for rare materials going up and the semiconductors crisis, I think that still this is a very big miss for the company, and the company delivered a totally different thing than what it promised, and this is a red flag. I think that the company will not be able to sustain any of the promises that it made in the investors deck, and it should be evaluated on a growth rate around the 40% and decreasing in the next couple of years. Next up, we have the gross margin. In 2021, for Microvast, the gross margin was awful, and there were three main reasons for why that happened. First of all, it had a higher manufacturing cost that had an impact of around $17.3 million. Second of all, it had a stock-based compensation expense of around $4 million. And lastly, it was a one-time warranty cost for the company of around $50 million. This cost came as a result of a product that has been delivered between 2017 and 2018 in China. Microvast announced that the reason for the product failure was actually a piece delivered by one of its third-party suppliers. The company does not expect for this type of occurrence to ever happen again. In terms of adjusting gross margin, so without considering this one-time warranty expense, the gross margin adjusted was around 4.5%. This is much lower than the 16% that the company had in 2020, but it's still decent given the recent environment. Next up, we have the general and administrative expenses. This has seen a tremendous increase, mostly because of a $65 million increase in stock-based compensation. Next up, I'm going to be looking at the operating margin, and even excluding the one-time warranty cost that the company incurred in 2021, the operating margin still looks terrible. As you can see in this photo, the adjusted operating margin was minus 100% in 2021. This has been the worst operating margin that the company incurred in the last 4 years. Alright, now that we have established that the margins for Microvast were pretty bad, let's get into the cash flows. Unfortunately for Microvast, after 2 good years in 2019 and 2020, now the operating cash flow has turned negative for the company with a value of minus $45 million. One of the main reasons for the negative operating cash flow was a change in the net working capital. Now, the net working capital contains all the elements from the current assets and also current liabilities. Having a negative net working capital is usually a bad sign for the company. But as you can see in this photo, most of the impact came from the increase in inventories. So what this means is that during 2021, Microvast increased its amount of inventories. During 2021, most of its projects have been postponed or delayed, and so Microvast has acquired more inventories and it hasn't been able to deliver to its customers. This led to an increase in inventories, which in turn led to a negative net working capital. However, still without including the net working capital in the calculation of the cash flow from operations, this is still negative and it remains a bad sign for the company. Actually, this is one of the first things that I would like to see for the company improving in the first quarter of 2022, and I would really like to see the company having a positive net working capital and, more importantly, a positive cash flow from operations. Another thing that ties into inventories, and it is actually a thing that I like about the company, is its backlog. So these are the orders that the company has already received for its products, and it has increased to around 160 million as compared to 44 million that it had in 2020. Next up, we have the capital expenditures. These are the investments that the company is going to be making into its assets. As you can see in this photo, for 2021, the investments weren't that massive, but the company expects that in 2022 and 2023, it will have massive investments. Microvast expects around $300 to $250 million to be invested in capital expenditures in those 2 years. Most of those investments will be made for factories in China, but also in the US and Europe. What I'm most interested about is the investments in the US market. Now, Microvast has its factory in Tennessee. Also, it announced recently that it will open a research and development center in Florida, And so these are two important aspects for the company in order to gain some market share in the US, because as you see in this photo, the most of the company's revenue came still from the Asia Pacific area. In fact, the proportion of revenue from Europe decreased as compared to 2020, and Microvast became more concentrated in the Asian area. And I think this is not a great sign for the company, as I would like it to expand more internationally, precisely in the US, where it is basically non-existent. Alright, now that I had a short summary for Microvast's earnings report, as you can see in this photo, if we're gonna use the higher end of the guidance, which is 45% revenue increase year over year, the company seems to be 1 year behind the schedule. And what's more important is that the company delivers on its estimates. So I think it is very crucial that the company delivers in 2022. So a revenue growth rate between 30 and 45% would be, in my opinion, mandatory for the company in order to maintain some of the trust from the shareholders. To conclude, I do like Microvast. I actually am bullish Microvast, and I believe in its long-term success. But unfortunately, given the current events, I think that the company is at least 1 year behind the schedule, and it needs to continue delivering in order to gain some confidence from investors. Long term, I think Microvast can be a winner in the electric vehicle space, as it has a great technology and good market opportunities. Still, with all this considered, I think that for now the stock is a very high risk play. I think that the stock needs to consolidate a little bit around the $5 area. As you can see in this photo, the company is trading around the 6 area, and the $5 area has been a good support in the past for the company. So I do think that the company will continue to consolidate around the $5 area, and it might not have any significant runs until we see a good first quarter for 2022. To conclude, I will be looking at 3 things for the next couple of quarters. First of all, the gross margin. I do expect gross margins to increase, although I expect the higher manufacturing costs to also be present in 2022 and 2023 possibly. I do expect a positive gross margin, and that's something that I'm going to be looking for. Next up, I'm going to have the operating margin. I would like the operating margin to see a slight improvement. And second of all, I would want to see some positive cash flow from operations for the company. We're not going to talk about free cash flow for now because that's basically impossible, but I do want to see some positive cash flow from operations, and if possible, some positive net working capital. If you feel like you've learned anything of value today, or you want to see some in-depth stock reviews, please consider subscribing. Until next time, keep crushing it.